Hello everyone, good evening. It's Saturday evening, June 3rd, 2023. Um, I have been having Zoom meetings with my family and then sending it out to my friends who asked to receive it. The recording that we do on a Zoom meeting. But this weekend we have some family celebrations of a birthday, and we're not going to have the Zoom meeting, so I would do a YouTube video here and send it out to everyone. So before we get going, I usually have to bring up this disclaimer. And the disclaimer simply states, as you can see here, when you read it, I suggest you do, it claims basically that I'm not attempting to give any particular person investment advice. This is for educational purposes. I'm taking a look at the market, I'm giving my opinion, and that's about it. Anybody can view the video and make of it what they will. Um, so with that in mind, let me pause the video. Okay, so now just to remind you, the game plan here is to take a look at the weekly charts first and then the daily charts. We look at the S&P and the NASDAQ, and then we go on to look at some other charts and individual stocks, etc., with Shaken Analytics. So what we have here now are two charts. They're both weekly charts, but one is a chart that I've been using for a long time with some of my favorite indicators, and on this side here, and on this side here, we have a chart that I developed based on Jake Bernstein's work. Some of you know Jake Bernstein, and it's called a moving average channel, MAC. Okay, it has a 10 day or 10 week in this case moving average of the highs and an 8 week moving average of the lows. This is an indicator of a 3 week moving average of the lows, which one can use as a stop loss. You see, a stop loss. So, and there's a lot of other indicators on the charts. In any case, let's start on this side of the screen here. Okay, let's start on this side of the screen. Um, what I want to do is to follow my friend Larry Williams' advice, and that is to take a look at the trend, the momentum, the accumulation distribution line, and also the seasonals. To some extent, we want to know what the seasonals show us. But the trend, momentum, and AD, accumulation distribution line, are the three most important ones we want to look at. Now, recently I added on the Bollinger Band squeeze from John Carter, and it's at the bottom here of these charts. Okay, we'll discuss that now. So if we go to the top of the screen here, let's deal with trend first. You can see that on the weekly chart of the S&P, this is the S&P, right? Um, we can see that on the right side of the screen, we have the 4 EMA, exponential moving average, above the 9 EMA, the exponential moving average, and which is above the 30 front-weighted moving average. One way to consider trend is if these moving averages are stacked up, as John Carter calls it, when the shorter term is above the next and the next, like this, uh, they're stacked above each other, and you have an uptrend according to the moving averages. Another indication on this chart right here, and so far as trend is concerned, is the parabolic, these white dots. Okay. Now, when the parabolic is below the price bars, the candlesticks representing the price bars, right? Then it's indicating the beginning of a new uptrend. Okay. And so that's where the parabolic was and still is, indicating that we have an uptrend in place, right? We briefly had a turnaround here, flip-flop a little bit here, but then we resumed that uptrend that was started way back in October. So, as far as trend goes, another indication of trend you could use is the MACD. MACD, some people use it as a trend indicator or as a momentum indicator. It can conceivably be used as both. So insofar as trend goes, it's saying the histogram is this one is taller than this one. So the histogram is trending up and it's supporting the notion of our being in an uptrend here, right? Now the other one we use is the ADX 14 period, right? With the DI plus and DI minus. And I was using a histogram before, but I have the yellow line. Let me change it back to the, let me put it back just for a moment to the histogram and I'll show you what the difference is, okay? All right. You see, the histogram, for those of you who are not too familiar, the histogram is the ADX itself, the indication of whether we have a trend or not. When the yellow histogram is trending up, we have a trend. It doesn't tell you whether the trend is up or down. And the way you determine whether the trend is up or down, except from a visual inspection up here, right, is to take a look at the relationship of the DI plus and the DI minus. When DI plus is above DI minus, we have an indication of an uptrend, okay? The bulls are in charge, in other words, right? And you could see it coincides with this, with that this bar up here, right? Coincides with this bar here, all right? And it coincides with the occurrence of the 4 crossing above the 9, 9 above, and 9 being above 30, etc. The stacking of the moving averages. Now, ADX has not really been trending up for a while, but you can notice that last week it started trending up. So we do have an uptrend now supported by the ADX. Insofar as trend goes, then I would say you can't bet against the uptrend right here. Now let's deal with momentum. For momentum, we can see that this Jerry Appel's triple momentum indicator, which takes 3 periods into account, 5, 15, and 25 weeks or days if it's a daily chart. And when it crosses above 4%, okay, this 4% line, when it crosses above 4%, you have an indication of the momentum switching to the upside, okay? There's upside momentum. And you could see that coincides nicely with what we are looking at up here, up in the upper part of the chart, right? Now, that remains so with DI plus above DI minus for a while until last week when DI plus went above DI plus went above DI minus and ADX started trending up. Now the other momentum indicator, you can use RSI, which I use. RSI, when it's above 50%, it's a good indication that we have an uptrend. And you could see it beginning here, right? Right here. And then I added on the squeeze indicator of the Bollinger Bands, John Carter's indicator that he's so fond of and made a lot of money with. The red dots indicate that we're in a squeeze. The Bollinger Bands are narrowing. They're narrowed. And the green bar means that we are coming out of the squeeze. It is when we are coming out of a squeeze that you want to buy the index or the stock, etc. Okay, that's coming out of a squeeze. But there are other conditions that need to be in place in order to buy. You know, if you have the squeeze, if you have the green dot because you're coming out of the squeeze, you have increased momentum. You also have the stack of moving averages in your favor, 4 above 9, 9 above 30, shorter ones above each other, right? Follow? Then you have a setup for the squeeze. So you can then consider whatever else you want to consider before you buy a stock or the index or whatever. So that's what we're seeing here on trend and on momentum. Now let's take a look at the third thing, which is the AD line. And for that, we will come over here to the chart that I learned from Jake Bernstein. So on Jake Bernstein's chart, you have those moving averages. 10-week moving average of the high, 8-week moving average of the low. You have the 80 line crossing above the 57-week moving average. And when the 80 line crosses above that, we consider that to be a setup, and you're now looking for a trigger, meaning you want 2 complete bars above the moving average of the highs. Okay, now we didn't get 2 complete bars here, but if we go back in time, okay, if we go back in time, now wait a minute, this is a weekly, I'm sorry, we didn't get 2 weekly bars yet above the moving average of the highs, 2 complete bars, in order to give us a buy signal on the weekly chart. We did get it on the daily chart. We'll take a look at that next. Okay, so but you can see here that the 80 line, that's what we're considering right now. 80 line is above its moving average, and that's pretty bullish. Insofar as Larry Williams is concerned, it's his indicator, and Jake Bernstein is concerned, right? So now before I leave weekly charts, I want to look at this chart. Okay, this is a chart that I introduced some time ago. Okay, and what it consists of is the S&P on a weekly, of course, and 2 moving averages. A 9 EMA, the red line, and a 30, the forward weighted moving average, the green line. Now, if you look back in time, and I circle these buy and sell signals green or red, okay, you will see that you buy here, you sell here, you sell here, you buy here, you sell here, you buy here. In each case, you're making good profits. But I recently got in touch with a friend of mine who does a lot of programming, etc. And I don't use TradeStation or any software that I could do back testing on for algorithmic trading. I have a program, but I haven't really used it. So I asked him if he would back test this for us, and I will hear from him, I hope, soon. Okay? I just asked him today. Back test this for me. If you bought here and sold here, went short, okay? In other words, it's a long and short strategy, right? And then you went long again here. Look at it over 10, 20 years and tell me what the return on investment would be, etc., etc. Okay? So we hope to have that data soon. Now, what is this chart telling us right now? If we should have been long all the way from here, from June of 2020, all the way to the end of January of 2022, and if the 9 remain below the 30 all the way until it crossed here briefly, got a little whipsaw and crossed here again and never looked back since, and this was on January 13. So on January 13, we got a signal from this setup here to buy the market, buy the S&P. And you can see we never crossed back below the 30. So this is one of my favorite charts now. And you can see that same 80 line crossing over here now. And in addition to that, you have the unbalanced volume above its moving average of 30 weeks, right? The unbalanced volume. So all of this is lining up very nicely as telling us that we are in a bullish trend right now. Okay? Of course, there's overhead resistance, and we'll come to that. Let me come back to the left side of the screen here, right? Now take a look at this bar, last week's bar. You can see that it's touching 2 standard deviations, all right? So when that happens, it's becoming overbought according to, statistically, according to the volatility bands of the standard deviation. And if we look back here, if we look back in time, you could see that whenever we can see too easy here, but when we hit 2 standard deviations, we pull back. Okay, you see, when we hit 2 standard deviations, we pull back. We pull back a bit. In this case, we pull back in January for a long ride back down. Okay, But what I'm saying is that not to be surprised to see a bit of a pause in the market so that we could consolidate these gains here. We go sideways or we pull back for a bit and before we resume the uptrend. Okay? Now let's look at the daily chart. Before we do that, let me pause for a second. So these are daily charts now, I think. Yeah, daily charts of the S&P. And as I mentioned on the weekly chart, we've been hitting 2 standard deviations, and you could see when it does that, when we hit 2 standard deviations, we consolidated, went up a bit, came, hit it here again, pull back a bit, hit it here again and pull back. So it won't be surprising to see a consolidation period come next week or so, because that's just the way things are. People take profits at this level. There are algorithmic trading programs that are set up to take profits at that level. So that's what happens. In any case, on the daily chart, what do we have? We have the 4 EMA above the 9, the 9 above the 30, right? And we have the parabolic below the most recent bars, so it's indicating uptrend. So uptrend on the moving averages, uptrend on the parabolic, okay? Insofar as trend is concerned, if we go down to the ADX, which is another indication we use for our trends, well, we could also say MACD is trending up from, trending up above the zero line. So that's supportive. We got a buy signal here on MACD, okay, right here. And so we have an uptrend here on MACD. Likewise on ADX, you could see that the histogram started trending up somewhere here, right? Started trending up here on the 17th of May, and it's been trending up ever since. You can see that the DI plus crossed over the DI minus way back here, and it remained above it, okay? We saw that back on the weekly chart as well. So trend is in place, it's up. Now we were in a squeeze here on the Bollinger Band squeeze. You could see that during this period here, from here to here, you could see that the Bollinger Bands narrowed, okay? They came closer together here, and they continue to remain closer together all the way. This is what you're seeing here with the red dots. The squeeze is on. But then we came out of the squeeze here. And you could see that the momentum picked up as we came out of the squeeze. This momentum here, right? We trending up, we came out of the squeeze, we went back into the squeeze briefly again. You could see the bands temporarily coming together here when the market pulled back a little. And then we came out of that squeeze again with momentum increasing. So insofar as the squeeze strategy is concerned, we should be buying the S&P, okay? Because we're coming out of a squeeze and the moving averages are stacked up here and the momentum is rising, okay? So you have a ideal setup for trading the squeeze, all right? Bollinger Band squeeze. All right. So I mentioned momentum already, although we were looking at the trend in the first place, but then I mentioned the momentum here. And the other momentum indicator is this one here, is a triple momentum indicator that I learned from Jerry Appel, the guy who invented MACD. He also wrote books that I read and created this indicator. Okay, when it's above 4%, it's bullish. You won't be buying. Okay, see, like here, right? When it's above 4%, you're bullish. Now, bear in mind that we are now on the daily chart. You can see that this bar is between 2 and 3 standard deviations. On the weekly, we saw that weekly bar was hitting 2 standard deviations. Daily is ahead of it. It's now between 2 and 3 standard deviations. So the volatility is expanding, and that's what we mean by coming out of the squeeze. And we are likely to consolidate a bit. Profit taking is a good possibility next week. So we might go sideways and even pull back a bit. But should you sell your good holdings? Well, use your get out of the market strategy, your stop loss orders, if you have a good stop loss order, and you should know when you're going to get out. See, one of the things I use is this 3-day moving average of the lows. I wouldn't get out unless we break this here. I might consider selling. Okay, there's some other sell signals that I use as well, as you know. All right, so once we have these conditions in place, I think we are well placed for continuation of the uptrend. Now let's go to the 80 line. The 80 line is on the daily chart. It crossed over here, okay, on March 29th or so, right? March 29th. And then we got, so that was a setup to buy. And then we got 2 complete bars above the moving average of the highs, the 10-day moving average of the highs. So this was saying, according to Jake's approach, right? You have your setup and you have a trigger to buy. Buy. Now, the way Jake sets this up and the way he discusses it, as long as you have the 80 line above its moving average, its 57-day moving average, even though you get 2 complete bars below here, you don't sell. You just keep riding it up because you don't have a sell signal, because you might have a setup here of 2 bars, but you don't have a trigger of the 80 line being below the moving average. You have to have a setup and a trigger to sell. So once you bought here, when the S&P was around 4,050, okay, you're at 42.82 without a sell signal there. That's the way that we use this chart, okay? In order to have a sell signal, we must get 2 complete bars below the moving average of the lows, and the 80 line has to be below its moving average. Until then, I'm in the market. I'm telling you what I'm doing. I'm in the market. Now I'm getting emails from friends, you know, some bullish and some bearish, and some anticipating a collapse, right? One in particular is always anticipating, it seems to me, always anticipating a collapse, kind of a perma bear, you know. So, you know, I mean, I have to go with the bulls, man. I'm a bull, you know. I hope I don't get hurt. But Alex also sent a chart where he said that there's a bearish divergence of MACD. Alex Eller, you know, my friend Alex. Well, I see what he's looking at, but but in fact, this is where he's looking. He's saying that you get a high here, you're getting a high here, and even here, but MACD is giving you lower highs. Okay, not until this past week though. You know, the MACD is picking up again. So we'll see. That's to be determined. The other chart that I got that I shared with all of you who get my emails is a chart by my friend Mike, and it's a chart by what's his name? Oh, I blank on the name now. Jeffrey South, who used to be associated with Raymond James, and Jeffrey South is showing us a chart of a head and shoulder, reverse head and shoulder pattern here. Okay, you see the indication? There's your head, here's your shoulder, and here's a shoulder. Now it's a little bit of a stretch, but if you drew the neckline here, you have an inverse or reverse head and shoulder, and you have a breakout above the head and shoulder pattern. So take your choice. You want to be bearish or you want to be bullish? I choose to be bullish here. I think the preponderance of evidence from the charts that I use anyway tells me I should be bullish, okay? And that's what I'm doing. All right, let's look at the Qs quickly. Q. And we have the daily charts here, but let's look at the weekly. Shouldn't be much different, okay? Let's look at the weeklies first. And on the Qs, on the weekly chart on the Qs, you could see the 4 EMA, the 9, 4 is above 9, 9 above 30, you know, here, right? You could see them stacking up here again, all right? on the Qs. Let's look at trend and momentum and 80 line. So the trend is up according to this. Parabolic is below the most recent bars, so we have an uptrend. I'll go through this quickly. MACD starting to trend up again, but we got a buy signal way back here on MACD, right, on the weekly chart. And on the weekly chart, we still don't have a sell signal from MACD. Now, on the weekly chart, we had a crossover of the DI plus and DI minus here, but it took a while for ADX to start trending up, but it started trending up back here, okay? It started trending up here somewhere around the end of March. You could see it started trending up. So as far as the trend is concerned on the weekly chart, this is confirming the same thing we saw with the S&P. That's why a lot of this is redundant, so I won't spend much time on it. Okay? It's basically NASDAQ, S&P. The old folks that I used to listen to on CNBC and so on would say NASDAQ leads the rest of the market. Now, I might as well mention something else here before I forget. There's been a lot of news, a lot of commentary that this market is so vulnerable because the big cap stocks, especially technology big caps, the Apples and Microsoft and Nvidia and so on, they're the few that are really moving, and the small caps are not moving at all. Well, guess what happened? Last week, that turned right around. So breadth has improved. Not only are the big caps moving, the generals are leading and the soldiers are following. Okay? Generals are leading. They've been leading for a while. NASDAQ has been leading for a while. Now the rest of the market seems to be following. So I'm not too concerned about the breadth because breadth just turned around. I won't show you all the charts. It will take too long, but I could tell you that. I've been looking at a lot of different people I respect, and that's what they're seeing, okay? Especially Larry McMillan. Larry McMillan is just pointing out, and I sent you his weekly, I'm sure I sent you his weekly update today or yesterday. Sees breadth improving. And Larry McMillan turned bullish for the first time in a long time because he did his analysis before the market closed on Friday, indicating that he would turn bullish if we closed above 4,200. And guess what we did? We closed above 4,200, didn't we? On the S&P. So Larry McMillan, who is very cautious, just turned bullish. Anyway, let's go back to the Qs. The Qs, the weekly chart, nice uptrend, okay? But again, we're hitting 2 standard deviations. And in fact, we're a little higher. So don't be surprised to see a pullback next week or a leveling off, a consolidation. That is the way the market grows. It goes up. Consolidation is like breathing in and breathing out, okay? Larry Williams says that. He says the market has to breathe. So that might be the case next week. We'll see. We'll see. So where am I? I was talking about trend and I got lost in the weeds. Momentum is on the, let's talk about momentum. You see the momentum indicator here, the triple momentum, cross above 4%. Look at this other momentum indicator from the squeeze, right? You could see that we were coming out of a squeeze here, right? Coming out of a squeeze here in the Qs, and we are still coming out of a squeeze, right? We're still trending up, and momentum is still trending up. That's the important thing here. Okay, we look at Jake's chart. Okay, on the weekly chart, we got the setup because the 80 line crossed above its moving average here, right? So we had a setup here, okay? We had a setup here, right here, okay? But then we needed a trigger, and the trigger was we were waiting for 2 complete bars above the moving average of the highs. So on the NASDAQ, we had our setup and we got our trigger to buy the market, buy the NASDAQ, buy the market, right? So what followed? A nice uptrend, as we saw, right? And that's where we stand. Now on this, you could see that not only is 80 line above here, but you could see that the relative strength of the Qs versus the spider, the S&P, that went up, right? And an unbalanced volume is triggered as well, and it's below its moving. Sorry, it's above its moving average. Okay, so that's where the Qs are. Let me take a pause here because I want to see where we go next. Okay, so let's take a look at some individual stocks. Jim Cramer recommended, he says, let's see, 7 stocks that you should own. They're all big names. In fact, I own 6 of the 7. Well, let's take a look anyway. Apple, okay. Here's what Apple looks like. We have the chart with the 9 EMA and the 30 weighted moving average on the weekly chart. We want to look at this. We want to see that this is trending up. The 9 is trending up above the 30. Remember what we saw with the S&P, right? That once this is a nice indication of an uptrend. So, okay, Apple started a nice uptrend somewhere here in February, and now we're still running. Now, the other thing I want you to look at is the 80 line here. You want that above its moving average, and you want the OBV, unbalanced volume, above its moving average, and the relative strength above the moving average here, because this will indicate that it's outperforming the rest of the market, right? So you just take a quick look and see, is this line above this line? Is this above the moving average? Just a quick look at these, and I'll change the symbols as we go along. Over here, you could take a look and see if we're in the squeeze, okay? See if we have a squeeze going on here. We've been in a squeeze way back when on Apple, but we came out of it. See, way back here, all right? But we came out of it and started trending up, back in January with the rest of the market. As Apple goes, so goes the market. Take a look at a few others. Of course, Microsoft, right? Look at Microsoft. See the picture? Just run your eyes down here. And you see the volume above normal, above average, right? So these lines are above the averages. That's up. This is trending up. We don't have a squeeze. We had a squeeze back here. We had a squeeze back here, but we broke out of the squeeze and remained above it. Okay. My next one, Nvidia. Nvidia took a big run up and then consolidated. Okay. So you see how it went above the 3 standard deviation line that day after earnings, but then it went sideways, what I was talking about before. It's breathing. Watch for it to start going up again. I own Nvidia. I own Microsoft, Apple, Amazon, Meta, Tesla, and Google. Okay. But let's put the other ones up. That was Nvidia, Amazon. I had these before that my friend pointed it out to me, that these are the ones Cramer likes. See it over here again? Look at the relationships between these lines. Very easy to spot. Once these lines are above the averages and the 9 above the 30, you know you have a strong uptrend on the weekly chart. And on the daily chart, you're looking for momentum and the trend. Trend here, right? Amazon. Meta. By the way, you don't have to buy Amazon at $124. You could buy AMZU, which is leverage 1.5 times. Okay, the true price of Amazon. So AMZU. I'll just let me do that. AMZU. Okay, my friend Terry pointed it out to me. So you see how the lines are above here, 9 above 30, and this is a new issue, so it doesn't give you all the data you need, but you could see it's just tracking Amazon, right? It's just tracking Amazon. Now, Meta, the old Facebook, similar thing. You see this? Look at the lines here, right? And it's not in a squeeze. It came out of a squeeze a long time ago. Way back here, it came out of a squeeze when it was about 130. Now it's 272. But it came out of a squeeze. Now, let me bring it back up. Next one, Tesla. I have the ETF. I bought because it's leveraged 1.5 times. I figure, what the heck? That's a good play. So Tesla, look at what's happening over here. See, the lines are just crossing above their averages. So you're getting this at a good price. The 9 above the 30 here, right? It came out of a squeeze right here. I bought it. I bought the ETF somewhere here when it came out of a squeeze. Okay. TSLL. See, when TSLL came out of squeeze here, I bought it when it was around $10. I have a nice gain in it, super gain. So what else we have? The last one is Google. All right, you can see the picture, same picture. These lines above the averages on the weekly chart, and the 80 line above its moving average. The 9 above the 30, I'm sorry, 9 above 30. And it came out of a squeeze here, see? I bought Google a while ago when it was coming out of its squeeze. So those are 8 stocks that Cramer says you should own. Let me take a quick look at Shaken and then we'll end. We're running about a little over half hour already. But let me pause this here. Okay, so we'll end with taking a look at some lists, some watch lists I have on Shaken Analytics. And so I have a master list, what I refer to as a master list. Over the past couple of years, really, I've been collecting a list of stocks. You could see that it's over 200 stocks, right? And whenever I find a stock that looks really good, it may not be the time to buy it, but it looks like a stock that somewhere in the future you might own, I put it on the list. Well, if you're curious, this is how the list did last week, okay? These stocks, including SoFi, the financial, and the software company Path, this is how they did. The percentage increase for the week, okay, on the master list. What I'll do is you could always stop the video, take a note of anything you want. Now, of this list, I usually buy stocks with the green rainbow because those stocks are rated bullish or very bullish. And the probability of these stocks continuing to make money is much higher than the neutral or bearish ones, or very bearish. Okay, so I buy the ones with the green rainbows. It doesn't mean you can't make money with the ones that are not rated bullish. Right now I own Tesla and it's rated neutral, but I bought it for a number of reasons which I already discussed with you. But you can see it's up 15-16% for the week. So let me page down. You could get that list. You could stop it, copy what you want. Let me go up to apps, APPS. And you can see these are the stocks that are up for the week. Now AI, I owned a lot. I had a big gain, a huge gain. I made one of my unusual errors. I held it too long because I had a huge gain and gave back a lot. But I did eventually ended up taking a nice gain on it. Okay. Now I'm going to wait until it looks like it's going to move up again. If we go over here, let me put it up here. You see, we'll see the move it had. All right, went all the way up here. Big gain. And then, of course, it hit 3 standard deviations. This is where I was busy, literally was busy, you know. I wasn't at the computer for a couple of days last week, and I missed this move. I missed the opportunity to take profits here. I think this would have been Tuesday or so. Yeah, Tuesday. I missed the opportunity on Tuesday. Anyway, that's AI, but I will buy it in here now at around $30. If it comes down to around $30, and the momentum, this momentum here, momentum has to start increasing again. If momentum starts increasing again, including the triple momentum, right? If that happens and the stock starts showing me consolidation and going up, I'll buy it again. I want to own it. All right, let me page down again, WRBY, Warbies, and you can see these are the other ones that were up, okay? A lot of bullish and very bullish ones, even some ETFs, right? Some ETFs, some ARK ETFs, IPO, Cloud ETF, right? Let me page down again for you. Dexcom, I think I traded Dexcom. Not sure if I own it at this time, but I like that stock very much. It's the manufacturer of the patch that diabetics can now put on their hands, and you see them advertised on TV, so they don't have to prick their fingers. They just put their cell phone next to it, and it takes a picture of it. It reads the reading on the AC or whatever the measure is, the blood level, the sugar level, right? So I think that's a good concept, and it should sell. So anyway, let me do one more. You see Apple is in this group here, right? Intuit, right? All these stocks are here. All right, I want to show you another list before we run out of time because I don't want to be too much over time here. Let me explain this list for those of you who don't know. Here's a list of stocks. Well, I want to go here now to show you what I mean. This list of stocks I made up last week. Remember? Those of you who saw the video last week or attended the meeting. What I did here was went through all these watch lists, right? And picked out the stocks that had what I call 4 stars. They can't get any higher ratings on their financials, earnings, technicals, expert ratings, right? They all had 4 stars last week. 4 or maybe 3, but I think they change, you know, it's changing, but from week to week, but they all had 4. And this is how they did, okay? And you could check the charts and see how they did. See? And now if we go back to the dashboard, all right? Let's go back to the dashboard. You'll see that all these stocks were up for the week. 6, 4%, 4%, all the way. None were down. None of them were down. Why? Because the power rating is giving you the cream of the crop. Now I did it for another list that had either 3 or 4 stars. Well, it seems that this one changed during the week for some reason, but they changed. But you can see that the very bullish ones here were all up on Friday. Let's take a look at some of them. You see 4 stars and it's up, right? I'll go through it quickly. 4 stars and it's up. 4 stars and it's up. Meritage, right? Check it out. 3, pull back. They lost 1 star. Another one, 4 stars and it's up. So you might want to take a note of these stars. These are the stocks that Shaken rates most highly with the financials. There are 20 ratings here. Each one has 5. Each one has 5. 1, 2, 3, 4, 5. Long-term debt to equity, price to book, return on equity. These are all fundamentals, right? So what I'm saying is that I got all the stocks that are rated the best from this list that I've collected, right? Look at Tenet, right? 3 stars. These are the 3 and 4 stars, right? See, 3 and 4 stars. And the other thing to notice is that most or all of them were oversold last week. All of them were oversold in this area here. So, and they were all up on Friday. Check this out. Check the oversold. See, oversold, 4 stars, right? So this is one power list to keep, man. There's a money-making mill here. Trust me. All right? Just this one page. It was oversold. It's still somewhat oversold. 3 stars. Work with this power list, folks. They're not well-known names except for Beazer Homes and stuff like that, right? But it's still oversold. The home builders took a break, took a breather. They took a breath, right? But now they seem to be going up again. All right? Well, I think that's about it. Let me see if there was something else I wanted to do. Here's my screen alert screen for last week. There were quite a few stocks. Quite a few stocks. I'll rate them by ratings. By ratings, you could see that the very bullish ones are on the top here, right? And these are all stocks that the screener identified. That means that they're bullish or very bullish, all right? They're oversold pretty much. They have strong money flow and strong relative strength, all right? So they're ideal. And if you look at the checklist is usually almost all green, if not all green, with an optimal buy. They're saying this is the optimal time to buy it. So take a look at this list here, folks. The screener alert, all these stocks. Let me just pick one at random, okay? All green, oversold. And if you look at the money flow, oversold, relative strength, etc. Okay? And they rated bullish or very bullish. Hey, that's enough to chew on. I gave you enough to chew on. If you can't make money here, pack it in. Pack it in, man. This is the cream of the crop. All right, I'll call it quits. We spent about 46 minutes on the recording. And have a great week. We'll see you next week. I'll send you this email when I can, this video, okay?